Today, I am talking about earnings. 4 times a year, a company needs to announce their earnings. It's like their report card at school. An A or a B or a C, meaning we did really well or we missed our earnings. A quick reminder, my name is Annelien Dinkelman. I am the owner and founder of Teach Me Wall Street. April is Financial Literacy Month, and we are doing a workshop for adults the end of the month, April 29th and 30th, and it's all about Wall Street 101 for adults. You can sign up on our website on the special financial literacy page, teachmewallstreet.com/Finland. Now, back to the topic of the day, earnings season. When a company is a publicly traded company, meaning it's listed on the New York Stock Exchange or the NASDAQ, 4 times a year, they have to announce their earnings. So when they announce their earnings, it is their unaudited, very big word, not yet audited financial data. So in there, companies and Wall Street analysts evaluate and say, we expect this company to do well. Because companies, when they do their earnings, they provide guidance to say, we expect we will be making profit in this quarter, or we expect to make no or very little profit. And you can actually look up this information in Yahoo Finance. So I am going to share my screen and show you how to find the earnings projections in Yahoo. So I'm just going to use Amazon, a company that we all know and have probably spent money at. So when you scroll down here, there is a lot of information in Yahoo Finance. But can you see here, earnings date? So that is coming up the end of the month, April 26. To see where the earnings projections are, scroll down on this page, almost to the end. Can you see here, earnings? So here are red, green, and white dots. So the white dots is the earnings projection. So you can see where the red dot is, Amazon missed the earnings, meaning they underperformed, not to expectation. 2 quarters in a row they had that. Can you see the green dot? That means Amazon at least did better than they expected. In the previous quarter, they missed their earnings. So when a company misses their earnings, it will often happen that the stock price go down. And a company, when they have several missed quarters, sometimes like in the case of Amazon, they had to lay off people post-pandemic. People are shopping in person versus shopping online at Amazon. So let's look at my other example, Clorox, that I also looked at in the previous video. They currently have a rating of like underperform. So let's have a look at their earnings. Their earnings date is coming up May 2nd. And when we scroll down here, they are actually hitting their earnings target. Can you see here? Green, 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 and the bullseye that in the 2 quarters ago, they actually were right on target. So there are many different ways to evaluate, am I going to buy the stock, yes or no? And looking at when the analysts when companies are announcing their earnings, and are they making their earnings or they're underperforming, can be one of the tools in our belt to help us decide, yes, buy this company, or no, we're gonna pass. Thank you very much for watching. Please remember to share this with anyone that you know interested in the stock market. Like and subscribe and stay in touch on Facebook or on Instagram. And remember, our summer camps are coming up where we are teaching Wall Street investing as well as cryptocurrency to high school students. See you tomorrow with another video in the series of April Financial Literacy.